Alrighty, what's going on, guys? Edward here, back with another video, and this is actually part two of how to identify major key levels in the markets, and now how to trade them. You know, because it's not just about how you identify a major key level. How do you actually trade them? You know, so with that being said, let's go ahead. If you haven't seen part one, I recommend you on the top of the corner right here. I'm going to leave you the actual playlist so you can watch and see part one of this thing. It's a series. I don't know how long we can get it, but so far this is part two. And if you're interested, I recommend you watching. Stopping this one, stop this video if you haven't seen the first one yet. Just go ahead in the description right here at the top corner, on the top of the right corner, and just go ahead and watch the first video. All right. So if you already saw it, let's get it. Okay. So um, the time frames that I was mentioning on the previous video, it doesn't matter. You can definitely do this in any time frame. I did explain that. It is important though to understand that higher time frames, if you have a major key level, like a very strong resistance, very strong support on a daily time frame, you cannot compare those with a lower time frames. Okay, they're going to be not that strong. Okay, on a lower time frame. However, depending on what type of trader you are, you really you can say, hey, you know what? I'm a scalper. I don't care whatever is happening at the higher time frames. I really don't watch them. I literally only trade between the 5 minute time frame all the way down to the 1 minute. I'm a scalper. I don't care whatever's happening there. And this can also work, if you don't really need, to be honest, to have or to know which is the actual daily bias. You don't need it. If the trend is bullish on the daily time frame and you're on a 5 minute time frame, you're actually scalping, man, you can have a big ass bearish trend, you know and if you go on the daily, we're still on a bullish, we're still looking bullish, but you can have a big ass downtrend. It could look like an entire crash on the 5 minute time frame. So it really don't matter. If you're a scalper, it really don't matter to understand the actual bias. If you want, you can maybe you can implement maybe a 50 moving average, 50 simple moving average, maybe a 200 period moving average, just to see where the trend is and if it makes sense to go buying. For example, this is a 200 SMA right here. So if you want to use this one and you are on the 5 minute and you can use it to sort of improve what you are actually seeing, I think it will definitely help you. Okay, so for example, okay, in this we're going to try to combine now a understanding where the major key level is. What's your key level, what's your support, your resistance that's been touched multiple times. And okay, understanding that it makes sense to go buying, because price is sort of above already the 200 SMA. So we should be buying when price is above, and we should be looking for sales when price is below. So for example, we see that right here market sort of created this support, right? This is a major key level right here on a 5 minute time frame. It's been touched multiple times, but you see it never broke below. If anything, the price was actually struggling to break below and ended up actually pushing up. We see even right here in this major support, this nice support on the 5 minute time frame. Remember what I explained on the first video, okay? That how do we know when to buy on a support and a resistance? It's very simple, guys. Don't make it complicated. Don't make it complicated. Trading, it's already complex, so don't make it more complicated. All you see on my YouTube channel, I'm trying to make it as simple as possible. You know, what is the thing that you need to see in order to go buying on a support or go selling on a resistance? The reaction. You need to wait for a reaction. Okay. Right here, we also had a bullish engulfing. This could have been a nice buy. Why not? And placing the stop below the zone. You know. So let's say you enter right here on the 5 minute time frame, right? You had this high right there. So if you enter was at this point, because you saw the price was not breaking that little support right there, okay, well, you can actually enter right there. Your stop loss was just below that low right there, and your target, man, you can make your target just right there. That high is your target. You're scalping. This is a 5 minute time frame. Okay, this would have been here, just barely 1 to 2 risk reward. Okay, that's what you're looking for. Price came back to the zone after you hit the take profit. Came back to your zone. Oh, guess what? It's touching the same area. Should I be going for another buy? Well, let's see. Do you have a reaction? Yes, we do have a nice reaction. That's a nice engulfing right there, right? The stop loss goes again below that low. You have to put it below the low, right? Take profit. You could be aiming again that high, or you want to make it all the way to the 1 to 2. Okay, go for the 1 to 2 at least. Or you want to use your moving average. Okay, use your moving average. You know the price now, it's starting to climb above the 200 period moving average. So hey, it's starting to look more bullish. And now that it's breaking, that you are seeing that break right here, start combining sort of stuff. You see the price actually broke now that high, and it closed, the body of the candle closed above. Those are bullish signs, very strong bullish sign. What do we have right here? All of a sudden prices started to stop. There was something here, some sort of force, invisible force in this whole area. Okay, price was creating a resistance right there, struggled until finally broke. Okay, so that's a resistance. So we have our key. We were able to identify that this is it was a resistance, and now I'm going to stretch it out, and I'll see if I can actually be looking for a buy if price comes back to the zone. So price literally came back to the zone after the break. Okay, if you're a smart money trader, you most likely were seeing that there was an order block right here, and the market actually mitigate that. But anyways, that's for another sort of stuff. But price and technically came back to the zone and boom, give you a reaction. If you missed this one, you see it give you the opportunity again. Look, holy cow, this was a strong push. You missed this one. Price came back again, touch it for a second time. This is our key level. At this point, this is an important key zone. Market is respecting it, right? And what are you looking for? You want to see a reaction, a strong reaction. What was their reaction? Oh, this candle, not so much, not so much. Maybe this one was the strongest. You see that bullish engulfing right there. I would still place my stop loss below that low, always below that swing low, and take profit. You can aim for the 1 to 2. Just make sure if the price, just in case this is your safest take profit right there, then after that you want to hold it because you're still above the 200. Be my guest. You can actually continue holding. You can use indicators, as I mentioned. You can combine this sort of stuff with the 200 SMA, even with a 50 simple moving average. Let's try to use that 50. Let's see. Let's test it out. You can use actually the 50 right here, and let's see. I don't know, it might actually work or not. Let's see. Yeah, sort of. It's a steal. It's a trend indicator. Okay, so the 50 simple, you see the price give you the buy signal right there, and you were still actually above the 50, so it makes sense to go buy. And here this buy did not make sense, sort of didn't make sense to go in this buy because you were below the 50. So you start now implementing and building up your strategy based on this. Should I actually go in this buy, even though I'm in this key level? Should I actually go in this buy? I'm actually below the 50. If I enter, I would be violating one of my rules. You know, so this way you start building up your strategy. Then maybe I will try not to use the 50. I'll try to use the 200 then. Is it 200? Yeah, I'm still below the 200. So market was sort of consolidating. It was moving sideways. You technically see the market is moving sideways. So indicators. This is why I'm not a fan of indicators, because when you are moving, when markets are moving sideways, almost I would say all. Yeah, I think I will say all. There's all indicators, they will be lagging, they will be lacking, they will be failing, giving you fake signals as well. You know, whenever the markets or the price is actually ranging, I dare to say that all indicators, there is no one indicator that won't fail when markets are ranging. They will give you false signals, you know. So best thing to do is when you see a consolidation right there, maybe just wait for the consolidation box to be broken and you start looking for buys then later, you know. So you can take that as well. And but let's continue. I hope it makes sense, guys. I'm trying to explain this as easy as possible. Hey, just look at the consolidation again. You see very strong consolidation in this case. Look at this. We identify. How do I identify? Look at this nice support right here. This is a very nice key level. Price respected it lots of times. We have one touch, two touch, three, four. Okay. So what are the signs for you in this case? Even though you are below in this case, do you want to go buying right here when you are below the 200? You can start using this thing. But when you understand the market is ranging, you know that this moving averages or whatever indicator you use, you can use Ichimoku, man, you can use whatever. You can MACD indicators, RSI, whatever indicator, they're all going to be lagging. Okay, so price action, it's always key. Do you want to go buying in this thing? Okay, well, let me see, maybe a little bit further behind. Let me see what's going on. Am I actually bullish? You can watch a little bit in the past just to see. Yeah, we had a recent break of a structure right here. So price is creating a higher high. It's higher than this one. So yeah, we're actually sort of bullish and in the 5 minute. So I really don't need to go, you know, you see what I'm doing. I really don't need to go on higher time frames. It's not that necessary because I'm just scalping. So if I know price is getting into this key level again and again and again, and let's say I don't know what time was this. This was Asian. This was Asian session. But let's say it was actually New York. Let's say it was actually New York session. By the time I'm waking up, I'm seeing prices coming back to the same zone it's been touching multiple times. What should I do? All right, price is touching the zone. I want to see for a reaction. What's their reaction? At least, and my favorite one, it's a bullish engulfing candle. Do we have a bullish engulfing candle? We do have at least one right there. I wish it was maybe a bigger one, but hey, it's a bullish engulfing candle nonetheless. I can take the chances. I Something I know for sure is that I won't be blowing my account with one single trade. Okay? Risk management. I always risk either 1%, 2% per trade maximum. It's rare when I trade maybe I risk maybe more, 3%, 5%. It's rare. But it's a possibility. So would you take the trade when this was a nice key level on a 5 minute time frame? You got the bullish engulfing. All right, you enter, stop. Where's your take profit? You have a nice take profit zone right here, by the way. This is the point where you can put it on break even, or halfway up, you put it on break even. Let it run. You know, what price did after that, yeah, just make sure at some point maybe start looking at the indicator because you want to see if this consolidation is over and now we're going bullish, or it's going into a trend. you know I see there was a lot of momentum right here, strong momentum. Maybe this was news. As I mentioned, I don't like trading news. When it gets like that, it gets very volatile. You see up and down. Maybe there was some news in there. Not good. But you see, this is pretty much ranging right there. You see, there's key levels all the time. The markets will show support. Why are they formed? Why are these zones being formed all the time? Those zones, remember that I mentioned also in the previous video, those are take profit. Literally, those are take profit zones. Whenever you're trying to enter, if you're trying to enter, for example, let's see, I'm trying to give you another scenario. Hold on. All right, let's see. Okay, for example, right here, you see price actually broke. Nice breakout of the 200. We're bearish, starting to look bearish. Okay, price breaks. Then all of a sudden it starts ranging. Market is ranging, building up liquidity. just moving sideways. Right here, actually was failing and it broke, came back up. So this support right here, it was being more disrespected. This was the one actually being more respected. So it's telling you that, hey, sellers are starting to get in control, a lot bigger. So prices from here it dropped, pushed up, it dropped, pushed up again. What is this sign? I mean, what is in this case? Hey, you are getting a very strong reaction. What was that reaction? We had a reaction right here, very strong candle, big candle right there. You place your stop above the zone, right? You place the stop above your area right here, depending where you're putting it. Maybe the spread could have got you out on this one, but let's say, yeah, let's say we actually got us out. This price went down, it broke the structure, came back up. There's still a lot of a struggle in this area, but we were bearish since we are actually below that 200 SMA. So it was a nice drop from there. But you see that this key level right here, it got very strong respected, right? That resistance got a lot more respected than the support. That support was broken first and then broke it again, then broke it again. So those are signs, it makes sense to go selling. Why would you be looking for a buy somewhere here? Even though, as I mentioned, people actually, they they most likely went on a buy from here. They're traders, retail traders that were, let's remove that indicator. There's actually buyers that most likely got in here, right? Because they saw this support right there, and they placed the stop loss just below, right? And they were aiming that high. They were literally aiming that zone right there. So price pushes up. That's a take profit zone. So by the time price gets here, the momentum is over. The bullish momentum is over right there. And now sellers, most likely the same buyers that were right here taking profit, they are now interested in going for the sell. So they're trying to look for the sales now. So selling pressure comes in, you know. And as I mentioned, if you use some indicators just to give you a little hint where you are, okay, yeah, definitely makes sense to go selling. You know, that's it. Whenever you use an indicator, it's just that. It's just to give you a hint. It's not to confirm 100% what's going to happen. You know, market broke right here, the 200, right? It didn't mean that it was going to continue crashing. No, the price is just instead continue pushing up later on. So you see, just be careful. Use indicators as a hint, just to give you a bit of a hint. You know, right here, look at this. The market created this support as well in here, and we were bearish. And let's say you see that nice reaction right there, right? Look at that nice bearish engulfing candle, and you are below the 200 SMA, right? You went through right there, and let's say you aim to a previous zone. Let's say that low, you wanted to aim to this low. What happened? Something happened right here. Maybe the hour. What time was it? Some sort of news, depending on the hour. Again, if you are trading Asian session, that's not a good hour to enter. So you shouldn't be trading at that hour. You should be trading either London or New York. Something happened. It did give you some pips right there. It reached halfway down your target. So it means that you should be on break even by then. Price then pushed back up, boom, and got you out on break even. But at least you were able to catch that halfway down. Okay. But this was a nice little key level that formed on a 5-minute time frame. Okay. So it's it's important, but not that necessary to actually use indicators. Okay. They're just there. They were just created to give you a little hint, but not to help you 100% of the times. You can sometimes even go against the actual indicator and you can still make money. You can still actually win. So I hope it makes sense, guys, in this part two, trying to make it a little bit better. And just let me know what you think. As I mentioned, let me see if we can go with part three. Let me know in the comment section below. And I'll see you guys in the next one. Take it easy.